Hello everyone, welcome again. In this lecture we are going to start a new chapter, but before we move to new chapter I want you to show a question which I want you to do now, or if you do not want to do now, just make it your homework so you can do it when you finish watching this lecture. Alright, now as you can see on your screen, that is question number 9 of the BPP exam kit. I hope that you have bought your exam kit by now, because it is very crucial. You can't just pass the exam by watching my lectures and reading the notes. However, my lecture notes plus the lectures with the help of practice, because obviously practice is so vital that you can't pass the exam without the practice. So you must buy the BPP exam kit, which you must do on regular basis. Now, if you look at question number 9, it was examined in 2011, and obviously there has been made some changes after that. Tax rates and allowances and different rules have been changed, but you know, that's where the exam kits helps us, especially for taxation exams, because we can't look at the past papers as I explained in one of the previous videos. So we'll have to use the exam kit. All right, so without wasting the time, let's read the question, which is question number 9. Now we won't do a whole question, and I don't want you to do the whole question. Just leave the requirement, you know, in the part A. There is some portion which is relevant to capital gains tax, so we won't do that one, and I don't want you to do that. So whatever you know about that, you just do that. And if you look at the answers from the back of this exam kit, there will be few things which you don't know yet, so don't worry about that. Alright, so first, if we look at the requirements of this question, and just bear me 1 second. Now in the requirement A, it says, which is worth 10 marks, prepare the detailed explanation with the supporting calculations as requested by the Morris in respect of the proposed SAE scheme. Now we have already studied this scheme, which is Save As You Earn scheme. You know about it, don't you? So while doing this question, please make sure you read SAE scheme first. So when you do this question, please read SAE scheme first and then do this question, and then you will do it better and you will understand the topic better as well. So please make sure you do that, then you do it. So what does it say? It says that Morris is FD of B Limited, BPLC. BPLC is a non-closed quoted trading company. Morris wants to provide information to the employees, to the company's employees, on a proposed Schedule 3 Save As You Earn scheme, a medical share scheme, a medical cash scheme, payment to employees for driving their own car on business journeys, and relocation payments. The following information has been obtained from a telephonic conversation with Morris. Proposed Schedule 3 SAE scheme rules. Now these are the rules which is proposed by the company. So what are the proposed rules? Employees will invest in the scheme for 5 years. So we know about the SAE scheme. Can we do it for 5 years? Yeah, of course we can. So we can do it from 3 to 5 years. So he's right in this, he's doing it for 5 years. So you will have to state in the answer that yes, he can do it, because we can do it from 3 to 5 years. So he's right because he's choosing it for 5 years. Then after that, the next rule says, the next proposal says the scheme will permit monthly investments of between 5 and 750. So we know that it is not 750. The maximum limit is a little different. So you will have to find out from your notes. All right. Then it says the scheme will be open to all employees and directors who are at least 21 years old. Was there any age restriction? You will have to read the notes. And then it says and have worked full-time. So it says about full-time directors and full-time employees. So you will have to read the notes. That is there any information regarding that? Then there is the next one. It says that the employees who has worked at least for 3 years. So you will have to read that as well from the notes, that was there any minimum requirement for that, minimum service period or something like that. So you will have to state that as well in your answers. Then it says that share options granted under the scheme will enable employees to purchase shares for £2.48 each right? So was there any information about the price which is being offered? For that as well, you will have to read the notes. I won't tell you anything now because you have to do this question. Alright, now it says that the price is $2.48, whereas the price will be £3 on 1st of January 2018 and £4 on 31st of December 2022. Right, now employee will invest £250 for 5 years every month, and he's already told you about the price as well. And bonus will also be added, which will be 90% of of the share price. And then it says that amount invested together with the bonus will be used to exercise share options. So you'll have to see that how much they can invest in total, and then after adding the bonus as well, that will be the amount with which they can exercise the shares. Now if they exercise the share, then how many shares will they be, and you just have to do that, because then the next bit is relevant to capital gains tax, which you don't have to do. Or even if you just identify that which things are right for this proposal and which are not, that is absolutely fine. You don't have to do anything else, because most of the things we haven't studied yet. Then it says medical care scheme. You can do this portion as well. Now we'll have to advise about the medical care scheme. He's asking that will he have to pay any tax on that or not? So what happens is that BPLC is to offer free private health insurance to its employees. Now about the private insurance, what was the rule? Cost to the employer, right? So we'll have to see that what is the cost to the employer in this case, Babin. The health insurance will cost the employer £470 annually per annum, per employee. So it is the cost to the employer, £470. Then it says that insurance would cost each employee $590 if they were to purchase personally. If they go and purchase personally, it will be expensive for them. So you will have to see that which one to choose, cost to the employer or cost to the employee. Then it says the employee who declined the offer will be able to borrow up to $12,500 from the BPLC for the medical treatment. So they will be able to borrow this amount. So you will have to think about the beneficial loans here. We know that up to £10,000 it is exempt, but after £10,000 we can calculate the interest on that, and we will have to do it in two different ways, which is average way. One is average way, another one is strict way. Alright, then it says loan will be interest free and repayable over 4 years. So he's told us about that as well. So it is definitely beneficial loan. Then it tells us about the payment to employees for driving their own cars on business journeys. So he's telling us that he will pay 36 pence for each mile driven, and if he picks up any passenger, then 3 miles extra. So we know that if he picks up an employee, if he picks another passenger, up to 5 pence is exempt anyway, and for 36 pence he has given a standard rate of 36 pence. So we know that up to 10,000 miles it is different rate, and over $10,000 miles, sorry, it is 25 pence, right? So you will have to see that how much he has been given and how much he should have been given. So if he has been given more than what he should have been given, then excess is going to be taxable. If he has given less than what he should have been given, then it will be deducted out of the salary. Then it tells us about the relocation payment. He has been given £10,000 to the employees. So we know that up to £8,000 is exempt, and the rest is going to be taxable. And he's asking about the national insurance contribution implications as well. So you will have to be careful about that. If you just state about the income tax, then you will only mark, you will only get some marks. You will not get full marks. So you will have to consider national insurance things as well. Like when we see in the previous thing about the mileage, up to 45 pence and like that. So on the excess mileage allowance which he gets, you'll have to pay class 1 NI as well. And if we look at the relocation payment, up to £8,000, we know that it is exempt, so you don't have to pay anything on that. Whereas over £10,000, employer will have to give, employer will have to pay the class 1A national insurance, right? So you'll have to consider that which NI is applicable in each case, and then you'll have to think about that as well. Alright, so that is the end of the question. So it is question number 9 of BPP exam kit. Please make sure you do it and then check the answers in the back side of the exam kit. And don't worry if you think that you find anything in the exam kit which you haven't seen here, then still don't worry, because a few things we haven't covered yet. Alright, now our next topic is trading profit adjustments. So what happened is that excuse me, when we make up our accounts, when we're doing the business, obviously I'm making my accounts. Now at this level, you know that you have studied accounting for quite long now. When we make up our income statement, so we take the revenue, then we deduct different sorts of expenses. Now in our comprehensive income statement, we add few things, we add few incomes, and we deduct some expenses, and after that it is going to be our net profit. So first it will be gross profit, then after a few other adjustments as well, we'll get our net profit. So that will be our accounting profit, won't it? Now on our accounting profit, there has been few things which was deducted, which tax people think they should not have been deducted. Now you might have seen this thing in F6 as well, but if you were exempt or if you have forgotten, then don't worry, that I've given everything in the notes. So you will have to see that which things needs adding and which things need deducting, and you will have to make some adjustments accordingly. Now at P6 level, examiner won't examine this topic in as much detail as he used to examine in F6, because obviously at F6 level he has got limitations on the things he can examine, whereas at P6 level he's got lots and lots of things to examine, so he won't be examining this thing in detail. Alright, now this topic, which is trading profit adjustments, so what we do is that we will take the net profit, which will be our accounting profit, which will be given to us in the question, obviously. So accounting profit will be revenue less different expenses, then adding fewer incomes, and the final amount is going to be our net profit, which is our accounting profit, obviously. All right. Now that is the profit, which is accounting profit, which we made for our own accounting records, but we cannot use it for tax purposes. Now when we show it to tax people, they won't believe it, then they will have to make few adjustments to that, obviously, right? So what would happen is that they cannot use the net profit which we have used in our in our accounting profit, so they will have to make few adjustments. Now them adjustments are given in this chapter, which we'll have to see. So what they will do is they will take net profit from our accounting records, they will take our net profit, then they will make few adjustments on that. Now adjustments like things which you should not have deducted, the things which you should not have deducted at first place, they will add them things back to our net profit. Likewise, things which you should have added there as income, which you did not, they will add it here because they are taxable, they think they are taxable. Now things which they think you should have deducted but you did not deduct it, they will deduct it. Likewise, a few incomes which you added there, which they think you should not have added, they will deduct it out of the net profit, and the final figure is going to be taxable profit, which we pay our tax on. All right, so these are the few adjustments which we need to make. Now if you come to your just bear me 1 second. If you come to page 27 of your notes, please, if you have the notes in front of you. If you don't have, you can always look at the screen. So it's a trading profit adjustment. So it says that we'll take net profit before tax as per account. So whatever we have seen in our accounts, so we'll have to take them things. Now what we add here is expenditure charged in the accounts which are not deductible. Now tax people does not allow us to deduct few things, so they will add them things back to the net profit. So they think that they will be added to the net profit, so we'll have to add them back. Now which things we need to add back? Now there is a huge list of the things which we need to add back, and this list is the one which you can see on your screen now. Expenditure charged in the accounts which are not deductible, and obviously we will have to add them back, because they are not allowed by tax people, and there are lots and lots of things you will have to see it yourself. Then the next thing which we have to add is that income not charged in the accounts which is taxable. Now the tax people think that you haven't added them things into your net income, you will have to add them back. You should have added them back, but you did not add it, So that's why tax people will add it back to the net profit, so will they will be taxable. So which are the things which we should have added? Now, income not charged in the accounts which is taxable is the drawings. Now we know what the drawings are. When you are a business owner and you took something for your personal use, that is drawing. And when you took it for your personal use, now from business perspective, it is sales. It is sales of your business, because although you are taking it, but from business perspective, business is selling something, business is losing something. So you'll have to take that on the market value. Right? So the next thing is a couple of things which we have to deduct. First is the income included in the account which should not have been included, and so we'll have to deduct that, and expenditure not charged in the accounts which are deductible, and the expenses which you haven't deducted, you will have to deduct them as well. Now these are the list of income which was included in the accounts which are not trading profits, so we'll have to deduct them, because HMRC says that only trading profits can be added, so we'll have to deduct them. And the final thing is that expenditure not charged in the accounts which are deductible. Now these are the expenditure which should be deducted, so you'll have to deduct them. The first one is capital allowances, and the second one is the pre-trade commencement expenditure up to 7 years before the start of the trade. So what happens is that when you start the trade, obviously you have started the trade now, but you have been working on it few years ago. So whatever the expenses you have been spending on this business, on research and something like that, now you might have been spending the expenses up to 7 years back to the date of the start of the trade, so you can deduct them expenses. And there are few notes as well, rarely, which says that if deductible expenses are not included in the accounts, then it must be deducted, and any expense any expense not in the above list must be ignored, because we will assume that they are allowable. All right. Now on the next page, on page 29 of the lecture notes, you will see a question, and I've also included answer of that as well on the very next page of it, which is page 30. So you'll have to do this question first. Please make sure you do it first. Don't look at the answer, and then you can, after doing the question, you can look at the answer as well. All right. So that is it for this lecture. And in the next lecture we will look at the basis period. And the basis period is one of the complex topics of ACCA taxation exam, be it F6 or P6. The next lecture which you will see will only be, they are basis, although that is basis period, but that is at basic level. So that is relevant to not only P6, but that is also relevant to excuse me, F6 as well. All right, so that is basics of basis period. Although the next one, the lecture following that will be the one which is only relevant to P6. I will tell you when it is there. That is complex basis period. So there are a couple of chapters following this lecture. All right, so that is basis period. Please make sure you do the questions which I've just asked you to do them, because practice is vital, as I said. All right, that's it for now, and I will see you in the next lecture with the basis period. Thank you and good luck. Bye.